Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and this is the Forex weekly outlook for the week of October the 10th, 2011. Now, getting started this week, we're going to have a look at, we're going to begin where we always do, I should say, with the US dollar index. Now, what I want to point out here is that we have a lot of volatility coming into the market next week or this coming week. And we're going to see probably further issues out of the Eurozone. So we have to deal with some fundamentals here, but I believe the technicals are slowly working them in. Now, looking at the dollar from Friday, we've had a slightly better non-farm payroll. I don't know if I would go as far as to say it's great, but it's moderately better. So what we can see, the outcome from Friday is very thin, choppy markets. We've come down and tested the major level from vantage point. Down here, sitting at this 78.40 level, it's come down, touched it, and then shot right out of there. Now, that was at the end of day. Now, what I want to point out that we had further issues with further downgrades in the Eurozone, with Italy and things of that nature. So that's a fundamental, an end of day fundamental that I'm not necessarily sure that that's the real price here. Now, the reason I'm saying that is I'm gonna move into the vantage point crossovers. Specifically, what we're looking at here is the short-term crossover, and we can see that the dollar's been losing some strength here. Now, of further concern, the predicted short, medium, and long-term differences are all pointing down. The predicted MACD and the predicted TSI have both crossed the trigger in overbought territory. This tells me that the current trend of the dollar is not necessarily going to end, but I think we're going to have a substantial corrective move here on the dollar for the first part, and the latter part, actually for the better part, for lack of a better term, the better part of the week. I think what's going to happen is the initial shock coming to the Eurozone from the S&P downgrade, and I think everybody here knows what I think of Moody's and the S&P. They carry absolutely zero weight with me. After indirectly or directly causing the financial crisis of 2008, they have zero credibility. So, they've downgraded them, that's fine, but once the shock of that comes off, my opinion is that we're going to see the dollar give up some gains, and we're going to get a little bit of a boost to the equity markets. Now, when I say this, again, I'm not suggesting that the dollar is going to reverse and completely sell off, but I think it's going to have a difficult time making a lot of gains this week. Now, looking at this and comparing it directly to our S&P 500, everybody I'm sure is well aware that I've talked about this correlation between the equities and the dollar index. We can see here that we have a very similar pattern forming. Now, it's not quite complete. The short-term crossover is crossed to the upside, but the predicted MACD is crossed, but the predicted TSI is not. Point of interest here, we're still running below the zero line on the MACD. So again, this still more or less confirms to me that this is a move up in the equities is going to be short-term and likely corrective in nature. We are not going to turn around and completely reverse, in my opinion, on these equities and get into 1350 again on the S&P 500. I don't see that happening anytime soon. My bias remains, as my own clients know, that I've been issuing repeated sell orders on the S&P 500 since basically the middle of July. So any strength higher, terrific. We'll use that to sell. Right now you can see I have this line drawn across here sitting about this 1230 area. Very significant area sitting up in this 1230, 1220 area. And you can see we have consistently lower highs. You can see we have one right here when it retraced up. We didn't even get to that major line. We had another one here this past week. It's still consistently lower highs. And of further interest, we now actually have a lower low. That is incredibly bearish in my opinion. But again, we're going to see a corrective move. Nothing goes straight up, nothing goes straight down. That remains my view on things. So any move higher here I think is a good selling opportunity while we're waiting for the dollar to return to its current uptrend. Now the metals to start the week, gold remains in heavily oversold territory. My opinion is that it is going to start to move higher. We can see that we're rising off this level in this 1540 area, but we are still very bearish here. Now looking at these shorter term crossovers, we've had a short term crossover, we've had a move up on gold up towards the 1680 mark, I believe it was, and then all of a sudden it just collapsed. And again, we're looking at risk aversion. Now normally when you see risk aversion like this, the gold benefits from that. In this particular case, it's not. So we want to be mindful of that. Now, the silver trade remains in a very bearish situation here, but again, when we're in oversold territory like this on the metals, usually we're going to, this is all leading into the picture of a corrective move lower on the US dollar and the US dollar index in general, because usually you'll see the equities will move higher, silver and gold will all move higher, and the dollar will move lower. Well, our indications here are warning us of a corrective move is coming. That brings us into light sweet crude oil. You can see the same thing is happening there. Predicted MACD, predicted TSI, predicted short, medium, and long-term differences now breaking above the zero line. This is all quite potentially bullish. But again, light sweet crude oil is at the mercy of the fundamental that's going on in Europe right now. If those equities sell off because risk aversion is off the table, crude oil will plummet. So be very careful of that. That's why it's extremely difficult trading under these conditions with all of these short-term fundamentals.